Publicly traded companies have been stacking billions of dollars worth of BTC, driving its price higher and fueling speculation that a supply shortage could send the orange coin into overdrive. But now, something new is happening.
What's happening?
They're starting to do the same, but with Solana. And this begs the question of whether Solana's SOL could see a similar vertical price surge in the coming months. And that's why today we'll be telling you all about the companies that are stacking SOL and what it could mean for SOL's price. My name is Nick. Stay tuned. Before we begin, you need to know that I am not a financial advisor and nothing in this video should be considered financial or investment advice. This video is purely for education and entertainment, meant to guide you on your crypto quest. Also, do note that many members of the Coin Bureau team do hold SOL as part of their personal portfolios, so just full disclosure there. Right, with that out of the way, let's get into it. Now, the idea of companies adding altcoins to their balance sheets may seem like an exciting development, but in many ways, it's a natural next step. After all, it was only a matter of time before others began emulating MicroStrategy's bold approach with Bitcoin in hopes of replicating its success. And to see why this shift feels almost inevitable, let's start with a bit of context. MicroStrategy, now just Strategy, has been a leader in business solutions since 1989, but its identity shifted dramatically in 2020 when founder Michael Saylor began converting company reserves into BTC to hedge against inflation. Saylor's conviction led to the decision to spend $250 million on over 21,000 BTC. Saylor has since become Bitcoin's biggest advocate, so much so that he actually stepped down as CEO of MicroStrategy in 2022 to focus on Bitcoin strategy, while Phong Le took over as the CEO, emphasizing that Bitcoin was now the company's core value proposition. The rebrand to Strategy in February 2025 reflects this transformation with a new Bitcoin-inspired logo and orange branding, signaling its commitment to being the world's first Bitcoin treasury company, or BTC. In October last year, Strategy also unveiled its 21-21 plan, which involved raising $42 billion, split evenly between $21 billion in equity and $21 billion in fixed-rate securities. It also announced a new KPI called the BTC yield, which basically measures how the amount of BTC per share changes from one period to the next. The result is that Strategy has built up an ungodly stack of sats. At the time of shooting, it's currently sitting on 553,555 BTC, possibly more by the time you're watching this video, given how Saylor likes to scoop up the stuff. The company's early position in Bitcoin and its subsequent hoarding means that MSTR's price acts as a leveraged play on BTC, often outperforming BTC itself. And all of this has helped Strategy become incredibly successful to the point that MSTR has been added to the Nasdaq 100 index. And if you watched our video about companies stocking up on BTC, you'll know that Strategy's approach has inspired other companies to follow suit. And these include Mara Holdings, the world's largest Bitcoin mining company. Mara adopted a full HODL strategy back in July 2024, meaning it won't sell any of the Bitcoin that it mined. Like Strategy, Mara also raised billions of dollars through ATM stock offerings and convertible bonds. At the time of shooting, Mara has accumulated 57,600 BTC. Another company accumulating BTC is Riot Platforms, the world's second largest Bitcoin miner. Riot also raised capital through convertible note offerings and is currently holding a total of 19,223 BTC. There's also Semler Scientific, a US healthcare company which uses excess operational cash and ATM programs for BTC purchases. Semler is currently sitting on 3,467 BTC. Elsewhere is Metaplanet, which was once focused on hotel real estate, but is now Japan's first Bitcoin treasury company, obviously emulating Strategy's business approach. Metaplanet even used the same KPI, such as the BTC yield, which is why it's been dubbed as the, quote, MicroStrategy of Asia. Metaplanet currently holds 5,000 BTC. And there's Cango Inc., a Chinese auto and finance firm, which recently spent $400 million on mining equipment to launch its own Bitcoin mining operation. Cango currently holds 2,475 BTC. Oh, and by the way, guys, If you're looking to trade crypto, then you need to check out the Coin Bureau deals page in the description. Over there, we've got sign-up bonuses on the best crypto exchanges of up to $100,000, as well as 60% trading fee discounts on said exchanges. You see, these deals won't be around for long, and they are exclusively for the viewers of this channel. So take advantage of them ASAP using the link down below. Back to the video. So, as you can see, lots of companies are creating Bitcoin reserves of their own. The thing is, they're starting to do the same, but with other cryptocurrencies, and Solana SOL is emerging as the primary choice. One example is SOL Global Investments Corporation, which provides investment services for institutions. As a fun little fact, SOL Global wasn't always in the crypto game. The company was originally known as Scythian Biosciences, a Canadian biotech firm focused on developing cannabis-based treatments for brain trauma, like concussions. In June 2018, it rebranded and pivoted its focus to Solana, and the timing of the pivot is intriguing. And that's simply because it happened soon after Anatoly Yakovenko released Solana's white paper in November 2017, but long before SOL was launched in March 2020. Anyhow, at the time of shooting, SOL Global Investment Corp's website states that the company currently holds 40,350 SOL and is earning a staking yield of 6.26%. At today's prices, that's worth roughly $5.9 million, which is kinda disappointing considering how long they've been in the game, but hey, everyone has to start somewhere. Another company making moves in this space is Cypherpunk Holdings, which, by the way, has the ticker HODL. In June 2024, Valkyrie CEO Leo Wald took over leadership and Cypherpunk began acquiring and staking SOL. And this made it one of the first publicly traded companies to add Solana to its balance sheet, offering traditional investors indirect exposure to SOL. By September 2024, the company announced that it would rebrand to SOL Strategies, signaling that it would double down on its SOL strategy. As the name suggests, SOL Strategy is the Solana-focused counterpart of Michael Saylor's strategy, and the idea is to follow the same high-conviction playbook as Saylor, but with SOL instead of BTC. That said, Lee has acknowledged that the comparison isn't so straightforward, since the way their respective reserves are being utilized are completely different. SOL Strategies locks up most of its SOL in company-run validators to earn a yield, making its HODL stock feel more like a mining stock. Meanwhile, Strategy often issues debt to aggressively accumulate more BTC, which we noted earlier makes its MSTR stock more of a leveraged play on Bitcoin. At the time of SOL Strategy's rebrand in September last year, it held a solid 86,000 SOL. By February, it had nearly doubled that, bringing its total to just under 190,000 SOL. The buying spree didn't stop there, though. By the end of April, the company holdings had surged past 267,000 SOL. At current prices, that stash is valued at around $39 million. Another notable example, meanwhile, is Janova. In early April this year, a group of former Kraken executives took over the real estate financing firm by acquiring a majority stake. Leading the charge was Joseph Onorati, Kraken's former chief strategy officer, who stepped in as Janova's chairman and CEO. Joining him was Parker White, formerly Kraken's director of engineering, who became Janova's chief investment officer or CIO. Meanwhile, Marco Santori, Kraken's former chief legal officer, joined the company's board of directors. Janova's announcement revealed that it would begin building a Solana-focused treasury reserve. It also announced that it would be acquiring Solana validators and would be staking its SOL to earn a yield. Its JNVR stock has since gone parabolic, soaring by over 2,000%, and these gains are almost unheard of in the traditional stock market. Alongside the announcement, Janova also revealed that it had raised $42 million in an offering of convertible notes, with clear intentions to add to its crypto treasury. Sound familiar? The funding round included big names like Kraken, obviously, Pantera Capital, and others to name but just a few. In the first 2 weeks under new leadership, Janova acquired more than 160,000 SOL. By mid-April this year, Janova rebranded to DeFi Development Corporation before almost doubling its already impressive SOL stash, bringing the company's total to 317,273 SOL at the time of shooting, currently worth roughly $46 million. Yet another company accumulating SOL is Torrent Capital, which announced in January that it had created a crypto investment vehicle and added 2,000 SOL, which was immediately staked to earn a yield. Notably, Torrent said in the announcement that they believe that a scalable Layer 1 blockchain is required for the mainstream adoption of crypto. They acknowledged Ethereum's expansive developer ecosystem and broad array of dApps, but the company criticized Ethereum's high transaction fees and limited throughput, as well as its reliance on Layer 2 scaling solutions. Be that as it may, Torrent's SOL accumulation accelerated in the following months. In mid-February, the company added almost 5,000 SOL, bringing its total to just under 7,000. Just a week later, it purchased over 10,700 SOL, pushing its holdings to over 17,700. In early March, it acquired more than 8,600 SOL, and at the end of April, it announced another acquisition of over 13,600 SOL. At the time of shooting, Torrent holds 40,039 SOL, all of which is being staked to earn a yield. At today's prices, that is around $5.9 million. Clearly then, there's a strong desire for companies to add SOL to their balance sheets. Naturally, this raises the question of which companies are actively raising capital to expand their SOL reserves. In case you missed the news, Sol Strategies recently issued $500 million in convertible notes that will be used to buy and stake additional SOL. Intriguingly, this $500 million issuance was made to just one investor, a New York investment firm called HODL Partners. According to the announcement, Sol Strategies is looking long-term, aiming to build institutional-grade infrastructure for Solana. The announcement also did clarify that the yield being generated from the company's staked SOL would be accrued to both Sol Strategies and to HODL Partners. Of course, DeFi Development Corp is also looking to raise more capital to buy SOL. The company's latest filings with the SEC states that it plans to raise over, and get this, $1 billion to invest in Solana. And this is pretty crazy when you recall that the company's current holdings are worth less than $50 million. Notably, the statement also discloses plans to stake this SOL to earn an additional yield by clarifying that, quote, Solana does not pay interest, but staking rewards can be earned on Solana. The filing also made clear that while DeFi Development Corp are going all in on SOL, they're not so sure about the potential effects of unclear crypto regulations. In any case, these recent announcements will undoubtedly cause many others to follow in a similar path. One company that recently jumped on the bandwagon is Apexi, which announced plans to raise $100 million, 90% of which will be dedicated to building a Solana treasury strategy. Apexi's UPXI stock rallied off the back of this news to the tune of over 850% in a single day. So then, a lot of SOL being bought, and plenty more will be scooped up in the future. Now, the question is, though, is this enough to offset the inflationary effects of Solana's tokenomics? Well, we can actually determine this by doing some basic maths, relying, of course, on our brilliant minds. And by that I mean punching everything into a calculator. So let's start with a bit of context. Solana has a total supply of around 600 million SOL and an annual inflation rate of 4.559%, according to SolanaCompass.com. So this means that this year, the Solana blockchain will mint around 27.3 million SOL. We say this year because Solana's inflation rate actually reduces by 15% every year and will only stop decreasing once it reaches an annual inflation rate of 1.5%, called the terminal rate. But hey, let's not overcomplicate things. Anyhow, now that we've worked out that there will be 27.3 million SOL added to the supply, let's now work out how much SOL these companies are holding in total. Don't worry, we'll save you the boring bit and just tell you. In total, it's 624,463 SOL, nowhere even close to our target. However, we're not done just yet. If we combine the capital that these companies plan to raise for future purchases of SOL, then this adds up to roughly $1.6 billion worth, which at today's prices means a total of 10.8 million SOL. Add this to the current holdings of these companies, and that's a total of around 11.4 million SOL. Much closer to our target. But wait, there's more. As you'll no doubt have seen, major asset managers like BlackRock, Grayscale, Fidelity, and Franklin Templeton, to name but just a few, have filed with the SEC to launch Spot Solana ETFs. And this is significant because it will naturally result in billions of dollars worth of SOL being purchased for these products, assuming they're approved, of course. For perspective, the Spot Ethereum ETFs currently have a combined total of around $5.3 billion in assets under management, or AUM. From our perspective, it wouldn't be unreasonable to expect these asset managers to put a similar level of investment into SOL, given the rising institutional demand for Solana. So if we assume that these Solana products see the same amount of inflows as they did for Ethereum, which is about $5.3 billion worth, this would equate to roughly 35.9 million SOL, sending us beyond our original target of 27.3 million. In fact, if we combine this theoretical value with the totals potentially being held by these companies in the future, that works out to a grand total of 47.3 million SOL. And that's well over our inflation target. And this doesn't even factor in smaller companies that didn't quite make it into today's video. So then, this brings us to the big question, and that's, what does all of this mean for Solana's price? Well, it doesn't take a genius, or a calculator for that matter, to work out that this could be extremely bullish for SOL's long-term price action. And that's simply because publicly traded companies are planning on buying billions of dollars worth of SOL in the coming months. And this begs the question of why they're buying SOL. Now, from our perspective, the answer seems to be a combination of staking yield and Solana's future potential. Solana's staking yield is a very clear demand driver for companies to accumulate SOL. At the same time, many companies seem to see that Solana is a successor to Ethereum, so it's a way of betting on the future, so to speak. However, there is a caveat, and that's the fact that these companies have proven themselves so far to be less inclined to HODL their crypto holdings indefinitely. For example, Sol Global recently completed a strategic reorganization, divesting from all non-Solana assets, debts, and liabilities to focus almost exclusively on Sol. And this means they either sold or transferred all their other holdings. In theory, there's nothing stopping them from doing the same with SOL someday if something shinier comes along. And this means that the SOL in these companies' reserves might be more of a trade than a long-term investment. And if any of these companies start offloading their SOL, it could hurt its price. And given that many are inspired by Saylor's diamond-handed playbook, any signs of paper handing would send a clear message that this strategy isn't being taken very seriously. This would damage investor confidence and could even cause investors to panic sell SOL and the stocks of these companies. And if the stocks of these companies fall far enough, these companies could even begin selling their own SOL to stay solvent. That said, it's important to note that this is all completely hypothetical, and none of these companies mentioned have actually been selling their SOL. They've only been buying, and it looks like more buyers are coming, both in the form of publicly traded companies and Spot Solana ETFs, once they're approved. And that's why, even though SOL has been running out of steam in recent months, we still think it could have the potential to pick up where it left off and be one of the best performing altcoins of this cycle. Let's just hope that it doesn't have to endure yet another political meme coin launch before that happens. Now, if you want to learn more about the potential catalysts that could pump the crypto market, then check out our video on that right over here. And if you're not subscribed to the channel yet, you can do that right over here. Thank you all very much for watching, and I'll see you guys again soon.